Welcome back, everyone, to Web3 Unpacked, where each week we unpack the Web3 revolution and explore the people, projects, and visionaries building the trusted web. Joining us today is Sam Hallene, an investment partner at CMT Digital, an early-stage Web3 venture firm that supports exceptional founders pushing the boundaries of blockchain innovation. Welcome, Sam.
Thanks so much for having me, Rich. Excited to be here.
Yeah, very cool. We always love to have investment groups on because you guys hold a lot of secrets that a lot of the innovators and builders and smart people in Web3 want to know about. So we're stoked. And Sam, it looks like you've been with CMT Digital for 7 years now, which is a great run. It's awesome. And as an investment partner, and our viewers and listeners are definitely always looking to hear from guys like you because there's so many. We're all, I don't care what you're doing, if it's just a project or you're starting a business, you always want to know what those inside tracks are, and you guys seem to have it. So I think this episode will open up a lot of eyes and ears for many, many people. Sam, one of the things we love to do here is really kind of get an idea of how people got started on their Web3 journey. How'd you get going? How'd you get started?
Yeah. Well, kind of owe it all to CMT Digital. I guess I should start off by just saying that, the views that I have on this podcast are my own and not necessarily those of CMT's. But I owe a lot to CMT. So I actually read the Bitcoin white paper at the recommendation of an employee here at CMT Digital in 2015. And that's what got me really interested in the space. I graduated from university in 2017 and went to work at a bank, but knew that if I ever got the opportunity to work full-time in the blockchain and digital asset space, that I would grab that opportunity and run with it. And that's exactly what presented itself later in 2017. And so I joined CMT in September of 2017. And I sat across from the individual that was kind of starting to look at more venture skew opportunities in the blockchain and digital asset space here at CMT, and eventually joined the team full-time and have considered it an incredible privilege to be here at CMT Digital for the last 7.5 years, investing in what I believe is unequivocally the most interesting asset class in the world.
Great story and smart man, because it's perfect because I use guys like you as a kind of a benchmark, because there's, TradFi who are, maybe they get crypto a little bit, they get spooked real quick. And maybe they don't have the appetite for the technology and the speed at which, and the kind of erratic nature of the business. A lot of people don't have the stomach for that, but you made the change. You made the jump early, which is really great because it takes a lot of time to kind of get your head around a lot of this stuff. And you're learning traditional finance, which you absolutely have to know to be in this world to begin with. I often think about a lot of people I know in the traditional finance world actually trying to make that Web3 leap now, after years of me and other people barking at them going, hey, please look at the space, read the white paper. And much like yourself, once you read the white paper, the gears start going, the ideas start going, and you start to kind of go down the rabbit hole. So that's fantastic. I'm really happy to hear when I hear about guys like you doing that, making that switch really early. Now, can you give us, for guys like you and your organization, it's all about Thesis. Can you give us a little overview of what your top line thesis is?
Yeah, absolutely. And maybe it's worthwhile, Rich, just to add a little bit of context to who we are and kind of what we do. And I don't think you'll give me as much credit for coming over to CMT Digital after I give the background. So CMT Digital is a subsidiary of the CMT Group, which is a 27-year trading and investment firm by background. The founders, who are my partners on the investment committee at CMT, are 30-year plus capital markets veterans. They saw the writing on the wall that electronic trading was happening and wanted to be early into those markets, and have been successful in exploring new markets for a while. And the light bulb clicked for them earlier than it did for me before I joined the firm, that this invention of blockchain technology is perhaps the best mitigant of counterparty risk that has ever been created, and can be broadly applicable, but is certainly applicable in finance. And so they lend a lot of credibility to this risky technology. So it didn't feel as risky for me to jump in at the time, and so I feel uniquely fortunate. With respect to the thesis area, kind of going forward, our view is that blockchain technology is an everything technology that, much like AI, will affect most asset classes and industries. We think blockchains will do very much the same. The go-to-market strategy is a little bit different for both technologies, but we want to participate broadly in the upgrade of our database and computational infrastructure as a globe, as from an entire world perspective, and we think the kind of best technology on which to store the world's valuable information and data is a blockchain. And so we think that blockchains will affect almost every asset class and industry, and it's really just a question of timing on which industry is ripe for disruption. And so I think right now we're emphatically seeing an embrace of this technology from the financial services space, specifically stablecoins and payments. I think some of the other things that get me very excited are the incentive mechanisms embedded in blockchains being used to bring online new types of resources. So, decentralized physical infrastructure, things like, telecom networks, ISPs, IoT devices, even new infrastructure like solar energy being incentivized by a blockchain incentive mechanism. Those are so. If I stated it succinctly, the two areas that I focus on are really kind of DeFi, which I think is really eating CeFi, and then decentralized physical infrastructure.
Fantastic. Yeah. And you kind of put it really well, because I often think of like, almost like, there's altcoins and Bitcoin. Bitcoin is like this black hole that everything is flowing into. I see DeFi in the same way, right? You guys are fairly diverse, and we're going to get into that in a little bit. But I see it like everything hovers around DeFi, right? So you might have ISPs and video and IoT type of hardware to software services now going onto the blockchain. But ultimately, it's what DeFi and the blockchain with using DeFi opens up to the rest of the world, right? Rewards, payments, onboarding, everything goes through the whole DeFi lens. So that's fantastic. And you guys are really diverse, right? And you in your portfolio, when I was looking at your portfolio, I was like, wow, it's really big. Number one, you have a lot of really interesting players across DeFi, infrastructure, gaming, social media, and one of my favorite topics, mining. I think that's a no-brainer. I love, if you're in financing and supporting Web3 companies, definitely mining. Now, now I was going to ask you if you focus on a specific vertical. I think DeFi is kind of your sweet spot. Would you agree with that?
Yeah, I love all the financial innovation that's happening in DeFi. I'm super passionate about it, and right now is unambiguously the most interesting time to be in DeFi. I think dollars are collapsing into stablecoins like a black hole. I like that analogy. And I think that's going to fuel a lot of on-chain innovation.
Absolutely. Yeah, and some of your partners have actually been on the podcast before. Coin Ledger, which we're actually working with again, and Coinbase. We love talking to the Coinbase crew. Really interesting. They are not to lament over Coinbase, but they're really doing some fantastic, interesting things. Obviously on chain and DeFi, but also in government. Brian Armstrong is one of our biggest advocates, and so thank you, Brian Armstrong, again for that. So interesting times. Now, for you, it's if what we like to get from guys like you is like, all right, what have you seen in the VC world, the crypto VC world? Because you've been around this game for a while. What are the biggest areas of opportunity, do you think, in the DeFi world, or any Web3 company, if that matters?
Yeah, I mean, I think that some of the biggest opportunities are also the most obvious. So payments and stablecoins, the global adoption of Bitcoin, DeFi rails replacing CeFi rails for efficiency's sake. And, when you find a cost saving technology like this, over a longer time frame, what seems like a risky decision to adopt the technology, it becomes kind of a life or death situation not to adopt the technology. If everybody's playing on a lower cost structure than you are, then you can't compete unless you adopt the technology. So we think we're going through that cycle right now in the blockchain and digital asset space. So I think ripping out a lot of the old financial plumbing that's riddled with technical debt and replacing them with DeFi systems is going to be a big piece of our thesis going forward.
Yeah, I think you put it really, really well there. The old plumbing. I love that term too. And whether it's 2.0 or 3.0, this whole entire planet it's like glue and duct tape. I mean, even just to get your back office to work properly, it's a challenge. So I love that. And I kind of use that analogy as well. We're kind of redoing it. It's more quicker, more stable, it's trusted, and it's more cost effective, to your point. And one of the biggest challenges I see founders having consistently is fundraising, right? You had to know this was going to come up. Bringing Web3 projects on board, starting new businesses, and within a kind of like tumultuous, financial environment right now. Can you give our viewers and listeners some examples of kind of roadblocks you see founders and projects hitting along their Web3 journey as far as raising funds?
Yeah, absolutely. I mean, I think the things that I can speak to the things that we look for and what we like to see. I mean, certainly it all starts. We're ultimately investing in people, sometimes it might sound weird, this highly disintermediated world that I would start with like kind of people, but that's what we're investing into. So really, from our founders, we want to see a high degree of alignment. We want to see a ton of skin in the game, passion. Founders don't successful founders oftentimes don't lead balanced lives per se, and we're kind of looking for somebody who's if you will, cup is filled up by pursuing a big, audacious, somewhat scary goal. And so we look for that kind of alignment from the founder. We want the founder to be attacking a market that, if things go right, this is an absolutely massive market, and sometimes that involves creating um, a new market in and of itself, or just disrupting an existing market. So, I mean, I think that from the lowest level, we're looking for big markets and audacious founders. Yeah, in terms of pitfalls in fundraising, I mean, it's really just kind of pitfalls in company building generally. You have to focus is a rare and difficult commodity. You have to be extremely focused on your vision. Kind of, at the same time that you are ingesting information from the outside world, you also have to be able to put your blinders on and not be distracted by shiny objects. So focus is absolutely massive. Um, at the same time, we're investing in people, and oftentimes our early stage founders pivot. And so if something's not working out, you really have to have a maniacal emphasis on finding something that people want. And that's kind of the other thing that I would highlight is in the company building process, sometimes the mistake we see is that a um, a company is really building for the founder as opposed to what the market wants. And it's kind of like ultimately, I've heard it from a lot of the founders in our portfolio that have been wildly successful, is that it is a bit humbling building a product because you have all these kind of priors, you have all these kind of ideas about what you want your company to be, but the market really dictates what your company will look like um, at the at the end of the day. And so I think the best founders are ones that are really inflexible on the um, on the base principles on which they're building, but they're malleable in how they arrive at that objective.
Mhm. Yeah, I think it's I speak with, just like you, everyone from 2.0 to 3.0 and beyond. 3.0 in this world is a little bit different with the founders, and I always approach things, evaluating businesses or working with business through the lens of people and workforce. But to your point, there's so many other factors and satellites that kind of affect your world. But as a founder, you do have to be obsessed about what you're doing, but not to a detriment. And you also have to your point again, Sam, you have to let the industry help push you along as well. And you have to have your ears and eyes open, especially your ears, and listen um, to what's going on, because you might think you know everything, but you really don't. And you have to kind of adapt, overcome, and amplify from there. Um, and the other interesting thing too that I notice about Web3, maybe not so much from your purview, but what I see is a lot of people sharing knowledge. So that's a very new thing in the world of business. Like, hey, the better this person does, the more I'm going to find out how to do it better for myself and my organization. So that's really new and kind of a special thing within our world. I think that's great. And it does take a very, very special person. Most of the founders I meet are absolutely, to your point, obsessed. They know one thing and they do have blinders on and they go full tilt. And those guys are really, really, really successful. But you do have to open up your eyes too as you go through. Now, do you have any examples of, like, perhaps where we all love learning from mistakes, or maybe not love it, but we all have to do it? Have you had partners or even outside of your organization where you've seen them make critical errors, and what are a few of those maybe?
Yeah. I mean, I should start by saying that I make mistakes, all the time. And I guess if you're not making mistakes, you're not really learning and growing. So, um, I think that's a natural part of any evolution. I do think that, the mistake that venture capitalists often make is that we invest with the view that a company, needs um, our money and help to succeed. I think that's a poor kind of framing of how to invest as a venture capitalist, and I think sets the wrong expectations. The best relationships are where we serve as kind of like a consigliere, and what we've kind of come to the conclusion on is that we're not here to run your business. That's not the business that we're in. We know that the journey as a founder is oftentimes a lonely one, where you want to talk to somebody, and that's who we are. Is somebody to talk to think through large decisions with. We may express a hard view or a soft view, but ultimately it's your decision to make. And those are the partnerships that have worked best for us. Never trying to step in and run a company. I think that ends up very poorly oftentimes. And I think there's an adverse selection bias for the founders who are ultimately looking for that as well.
Mm. Yeah, well said, Sam. Because I've seen tons and tons of, and spoken with tons of VC companies and private equity and whatnot. And you do like almost like parenting. You get the helicopter parent who's always over the kid. You get the VC groups who are very controlling and they want to know where every cent and every thought is going. And to your point, that's not really why you're there. You're not there to run the business. You're not the backbone of the business. You're there to support really good ideas. But the really great VC companies, and it sounds like you guys are doing this in spades, is you're there to offer advice, because you, especially guys like CMT, you guys have a very large stable of companies that you're talking with every minute of every day. You see what's going on, and you're going to share that across your portfolio, and that group knowledge, that group think idea really comes into play, and you get to share what's worked, what hasn't, and fast track your CEOs and partners through sometimes tough waters. So that's great. Fantastic. And not to get political here, but it is interesting, and you can't avoid or escape as much as we try. Escape the political landscape, and finance and politics are always intertwined, as we're seeing more and more these days. How do you think the overall VC landscape has changed under Trump's administration? And I know it's only a month or so, a couple of months in, but how do you think it's changed?
Yeah, I mean, I think that this administration has overtly embraced the blockchain. I know that this administration has overtly embraced the blockchain and digital asset space. So I do think that there is a lot of focus on reshoring onto the United States, which was not the trend. It was actually the diametrically opposite trend during the last administration. And I think we want the best and brightest founders in the blockchain and digital asset space building in the United States. As a U.S. person, I want that, and so I think that that current has shifted. I think that we saw this. I think the technology was undeniable, even without the support of the administration. We saw the Bitcoin ETF approved, and we saw a massive VC focus on stablecoins as well. But now you have the crypto and AI czar David Sachs saying that the proliferation of US dollar backed stablecoins is imperative for the hegemony of the US dollar. And that is an amazing statement, which I agree with profoundly. But it doesn't matter if it's coming out of my mouth necessarily. It matters if it's coming out of the administration, and it is today. So I think that's an incredible in perspective to have, and bodes really well for the disruption of this technology within our capital markets here in the United States, and then also abroad. And we're seeing that very starkly in our portfolios.
Yeah, so many, so many details in here. This could be like 10 other episodes unto itself. And I find it very interesting. I have so many ideas around this and thoughts, both pro and con for Trump and whatnot. But yeah, the crypto industry, I kind of agree, if sans Trump and another person at the helm, perhaps, Web3 and crypto would still grow and it would do really, really well. I think it would just have taken a little bit longer in some respects. I think we might have still had to jump through fiery hoops with the SEC and other government regulatory outfits. So there definitely would have been more rub, and now opposed to now where things are a little bit more free flowing. And now with the Bitcoin reserve, that's phenomenal. Everyone was oohing and eyeing over it, but I think it's, we still have to take time and figure out what that actually means. But to your point, you do want to own it. US wants to own the idea of innovation within this space. And I think they will, and they have for a while. For a while, it's been going overseas because of the regulations and the problems we've had. But I think now it's open arms and hands reaching across the ponds. And I think there is going to be a lot of action, in the West, the East, and it's going to be really interesting to see how people stockpile, if they do, what nations do. That's really interesting. And what regulations they put on it and what regulations we do and don't put on our markets. So really interesting.
Just real quick, Rich, I think you raised a phenomenal point. I mean, I don't think that the broad-based participants in this industry are calling for no regulation. I think we're looking for regulatory clarity. And there's been a lot out of the administration and out of Congress that's moving in the right direction. Whether it's the Lummis Gillibrand bill, FIT 21, the Genius Act, the safe harbor provision that's been proposed by Hester Peirce. It's really positive to see the perspective shift that we want to foster this innovation within the United States, and we are going to have rules, but they're not gotcha type rules, right? They're fair and they allow for true innovation and change to happen, within the confines of what I think is the best capital market and regulatory apparatus in the world. So that's profoundly positive, and I couldn't be happier to see steps in that direction. Now, it's not signed, sealed, and delivered yet, but moving in the right direction.
Yeah, awesome. Positivity is the key word here, and that's what we have now, whereas we didn't have that before. Not to draw lines, but it is important to know that, and it is really important. You brought up a great point. No one ever in our industry, whether you're in the markets, you're Brian Armstrong and run your own exchange or DEX or whatever you're doing. No one ever said we're renegades and we don't want regulatory oversight or regulations in general. No one has ever said that. In fact, it's the opposite. And the key players were inviting themselves to the White House or to our government institutions saying, we'll help you. We'll actually help you make these decisions. And it was overlooked and, swept under the table for a very long time. But now they have a seat at the table. So it's wonderful. I think what you said, Sam, positivity all the way. And I'm looking forward to seeing what happens. But you got to be cautious. And there are lines you don't want to cross. Personal thing, I don't love presidents, putting out their own meme coins. I just don't like it. It's not my thing. You may have different thoughts on that. But I just, he can support the industry, which he is, and everyone else under it, create a cabinet that is very pro Bitcoin or crypto, create regulations, but I'm not sure starting your own coin right off the bat is the best thing. But that's just me. I'm not trying to ding the president, but that's the way my mind works. Now, in general, this whole industry has been under a microscope, especially these days. Are you seeing anything, through the lenses of, that you guys have? You seeing any interesting regulatory type of things coming our way?
Well, I'm very hopeful that we'll get productive stablecoin legislation, and very hopeful that we'll get a productive, comprehensive markets bill, which I think are very much needed for our asset class to establish that clarity, that those rules of the road. I think I disagree with the perspective of the previous administration that the current securities laws are adequate to govern this technology. I mean, those rules were drafted before the internet was even created, let alone internet native bearer assets. And so I do think we need new rules for this space, new rules of the road, and I'm very hopeful that the people that are leading these efforts understand this technology, and that it is a very pure embodiment of kind of free market capitalism, and that is important and in fact productive and has propelled the United States to where it is today. And we don't want to hamper those attributes of this technology.
Yeah. Do not stifle innovation, because that is indeed our biggest and best export, right? So whether it be financial innovation or physical product innovation, whatever it may be, that's super important. Now, Sam, you brought up a few times stablecoins. Like, I understand why stablecoins are important. It really is like within the DeFi world, it's kind of a hub that you operate and trade from, right? Because you can't go, you're not sending your assets back into the traditional fiat world, obviously. So you need home bases, and there's several options and swapping abilities and stuff like that. How do you see stablecoins potentially upsetting or kind of dethroning or maybe even eliminating the idea of a central bank digital coin currency?
Yeah, I'm pretty doggedly against a central bank digital currency, something that's administered. I think like from the Chinese perspective, we saw in the early days this DCEP initiative, and I remember in 2020 and maybe even before that, they were doing these like red envelope days where they gave you expiring cash, and that just seems like a dystopian vision to me, where that your cash would expire if you didn't use it. Government issued expiring money seems to me like not to be kind of rowing in the same direction as the principles which originally got me into this space. And I think that's, I think, if you value freedom and privacy, that would seem to be contrary to those beliefs. So I think stablecoins are, like a stablecoin issued issued on a public blockchain that have compliance and KYC AML solutions that are built native for blockchain assets, not kind of like retrofitted from a previous regime, but like built specifically for these assets. is very, I think will be a very powerful tool in helping to continue the dominance of the dollar in international trade and commerce. And so I think in some ways, stablecoins and not a CBDC are the most American way of competing with things like the Belt and Road Initiative, if you will. So I think stablecoins are like emphatically American.
Yeah, I agree. And Sam, you said nothing, nothing there that shocked me, because CBDC. This whole industry has been up in arms about it and has been open about speaking against it. I think personally, it's a disastrous thing to even introduce. So, and to your point, it's hard to retrofit back into legacy kind of technologies and or infrastructures as well. But very interesting times. Who knows what's going to happen? Well, I kind of know what's going to happen. I think you do too. So now, in our world, the Web3 world or the world in general, you can't escape the idea of AI, right? And its impact on everything. So I'm just curious. And again, this is one of those topics that we can go down, 1,000 rabbit holes, with, we only have a finite amount of time here, but do you think blockchain is essential for safeguarding AI development, right? Or even maybe vice versa?
Yeah, absolutely. I think that blockchains are going to be a very potent counterbalance to this non-deterministic AI technology from a lot of aspects, from a data protection aspect, from a deep fake perspective, from a truth and veracity perspective. Can you benchmark different models on an open source blockchain based standard such that you can know with a high degree of confidence that A, or your query was routed correctly, and B, that the model or models that are giving you outputs are giving you correct outputs within a certain confidence interval.
Yeah. In a nutshell, it'll help authenticate, right? And because there's going to be our world as we know it, as far as assets, like any kind of assets, like bifurcated a million times, right? You'll be able to do anything with anything you own or a part of, even through DAOs too. And it's important in authentication and credibility building is really important, and that's the backbone of what Web3 offers AI, and then AI will help to foster better communications and smoother pipelines and decision making for blockchain and Web3 itself as well. So really interesting, really interesting, and we can open that can of worms up another time. But what I'm really interested in is, because I think of this, I mean, I've been involved in this stuff for many, many years. So have you. We've seen a lot of ups and downs and turns and whatnot. But at the end of the day, I consider ourselves really in our infancy, right? You get to see a lot of different projects and protocols. What are you most excited about as far as tools and services that might be coming out in the next 6 months to a year, perhaps? Who knows? Within our world. What are you excited about?
Yeah, I mean, there's so much to be excited about right now. I mean, I think I feel uniquely privileged because I just get to learn all day from the smartest people that are, entering this space and coming in with kind of weird and wacky and outlandish ideas that turn out to be, I think the next $1 trillion companies are truly going to be built on blockchain rails in the blockchain space. And so I think for me, what's really exciting because I don't know, we're kind of entrepreneur led. I mean, we have certain theses, they're published on our websites. But I've heard it said that, as an early stage investor, we're trying to be early to categories before they're named. So before DeFi was named, or before crypto meets gaming or social, things like that, trying to be in those categories before they're named. And that's kind of where the edge is. And so, what I'm encouraged by is just the massive inflow of highly qualified founders into the blockchain and digital asset space, even with the, AI economy competing for their time and resources. We see this massive inflow of really smart founders at the early stages to the blockchain and digital asset space. So, if I had to talk about specific verticals, I mean, I do believe that there are going, and you see this even with kind of like the existing vanguard of growth stage or now profitable, even IPO'd companies that are embracing stablecoins, whether it's the Bridge acquisition by Stripe, Vlad Tenev writing a op-ed in the Washington Post about using stablecoins and then tokenizing securities. Like, this stuff is happening at these highly disruptive companies, these founder-led, highly disruptive companies. And from like a signaling standpoint, it doesn't get much more positive than that. So I think when we migrate, I think stablecoins were necessarily the first, or dollars were necessarily the first financial asset to be tokenized. As we see the long tail of financial assets start to come online, I think that's really interesting. I'm also really interested in products that could kind of only exist, like investment products that could only exist with the context of blockchain, or with the addition of blockchain. So like, internet native streaming royalties, things like a token flow or cash flow from DePIN projects, and using those in DeFi is super interesting. I also think there's a lot of still kind of like compliance infrastructure to be built that, again, as I said earlier, is built with this technology, blockchain technology, principally in mind. So built from a blockchain first standpoint, so that it doesn't really encumber, the global permissionless nature of blockchain, but allows us to complete, what is, I think, very necessary, kind of different types of compliance checks when we're moving, these assets globally. So those are two. Well, actually, that's a few verticals. But I do believe now is the most interesting time for the tokenization of assets that I've ever seen.
Yeah, and being in this world every single day, digital assets, it's everything right now. It's the fastest moving thing. Everything is being tokenized. I tell people all the time, every piece of equipment you buy for your studio or your office will be tokenized. Your company will be tokenized. Look at Michael Saylor. He's literally, turned his company into something completely different, and it's about tokenizing his entire world. Polygon is doing this really, really well. That's what 90% of their time is spent on building infrastructure on just tokenizing digital assets. Fascinating. And Sam, you said something really cool about CMT, and it leads into your thesis a little bit, which is you guys like to invest in companies that are working on verticals that have not been named just yet. That is the coolest thing. That is a very cool thing. And it actually paints a really good picture of the types of people and organizations you like to work with. It shows you that it's as innovative as we see things popping out every day on different chains or whatever, different tools and products and protocols. There are still people out there, even within the CMT world, that are tapping really unseen, uncharted territories. That's really, really interesting. And I'd love to learn more about some of those organizations, maybe in another spot with you down the road, Sam, or one of your, one of your partners. That really is interesting because just when you think you're breaking, cutting the edge, there's someone else out there doing something a little more outlandish. So that's really cool. Now, because people are, our listeners and viewers are very much into being entrepreneurs and cutting the edge, like you said. If you were to give founders, entrepreneurs, like one piece of advice from your kind of cache of experience within this world, what would that be?
Yeah, I mean, the first one is probably pretty obvious, but it just can't be stated enough. Embarking on founding, especially a venture scale company, is no easy task, and you'll have people to help you along the way, but it's a huge commitment, and so founding a company is not for everyone, and really, being a founder can be a lonely journey. So there's got to be a lot of I don't say this to discourage anyone, but I think I just have infinite admiration for the founders in our portfolio and outside, because it is a lot of it is Elon Musk describes it as chewing glass and staring into the abyss. So that's a pretty gloomy thing to say about founding a company. I think that's probably the big thing when you're thinking about founding a company. And then one of the things that our best founders just harp on constantly is focus, maintaining a maniacal focus. Don't let yourself get distracted by the market. Don't let yourself get distracted by competitors. Just maintaining a focus on doing something and doing something extremely well. And where you go off the tracks is by trying to chase shiny objects. I think this industry sometimes gets a bad rap for get rich quick type schemes. But I do think the best companies that are being built in this space are ones that are just taking a very long term approach to building, exactly with the benefits of this technology, the best mitigative counterparty risk that we've ever seen, global decentralized from day one. Those attributes, harnessing them to make what I think again are going to be the next cohort of $1 trillion companies.
Mm. Yeah, and a nice little theme that you've brought up a few times in our discussion is focus. And I think people outside of this world don't really get a real good glimpse at what, say, founders go through. I'm not talking about like Joe investor like myself who, the market's down. Well, if the market is down really a lot, that could affect how you're running your business, Web3 business or Web3 focused business or blockchain. Because a lot of your investment, a lot of your payment, a lot of your people are tied up into the market. It's a giant ecosystem that is just not, hey, we're making money with crypto or altcoins or Bitcoin. A lot of these things, these tokens, these assets are tied up into how the business actually runs and how it's supported. So yeah, that is, and look at the last 2 weeks. I mean, it's been a roller coaster ride, right? We're going back up, thankfully, knock on wood, but that will throw anyone off, especially a founder who has a lot of irons in the fire and is trying to feed different funnels, if you will. Really interesting, and something that, is unavoidable. That was great. Now, Sam, do you guys have any conferences you're attending or speaking at or hosting X Spaces, anything coming up?
I will be at the Digital Asset Summit coming up next week. And I think a few of my teammates will be there. We're a global organization, so we've got boots on the ground presence in Singapore as well, and offices in London. So this is a global industry. I do think the best way to develop relationships, even in this highly kind of Zoom focused world, is to meet people and shake hands. So I'm kind of always traveling, but the most immediate one coming up here is Digital Asset Summit.
Yeah, I will be floating around Digital Asset Summit next week myself. So maybe we'll bump into each other. You might get a text message or something from me like, meet me at this party or whatever, whatever it may be. But yeah, I've got a couple of meetings set up and that I'm excited about. And that's a big one. And it's right up your alley. So if anyone is attending that, be sure to look for these guys, CMT Digital. And how can our listeners and viewers, as we wrap up here a little bit more, we want to just know a little bit more where we can kind of get a deeper dive into CMT Digital and figure out who you are and what you're doing.
Yeah, well, thanks so much for the plug. You can go to cmtdigital.com. We've got all of our social handles there. We've got our research, the list of our portfolio companies. You can reach out to me. I'm S Hallene, that's HALLENE at cmt.digital. I pride myself on a clean inbox. So please do reach out if you've got an interesting idea. And, we're really looking to back exceptional founders and kind of do life with people for 7 to 10, plus years. And we think, we all think that the next, big businesses are going to be built on public decentralized blockchains. So that's something that we're unwavering in our belief in.
Awesome. And I couldn't agree more with that statement. And I'll have, Sam, I'll have all of your info listed below in the podcast links on YouTube and the other social channels that we'll be broadcasting across. All your information will be listed there. And if you're building a Web3 company or a protocol product, anything, keep an eye on CMT. Very interesting. And like, Sam, like you mentioned, you're kind of looking for that next, the people who are looking for the next galaxy, actually. So if you're listening, pay attention and take a look at CMT. Sam, thank you so much. I look forward. I enjoyed this conversation. I'd love to kind of continue to learn from you guys and you, and so would our audience. So we look forward to having you back.
No, thanks so much, Rich. It was such a pleasure. Great questions, and thanks for the time.
Yeah. Ciao. Thank you.
Thanks.
Web3 Unpacked is proudly published by Movement, a leading design consultancy that specializes in Web 2 and 3, strategy, design, branding, creative content development, and content marketing. We help companies ensure that their brand and business remain differentiated and competitive in a rapidly evolving digital landscape. To learn more, please visit mvmt.media.